Hey everyone, and welcome back to another video for today. So Nvidia released their latest quarterly figures. The call is over, although if we're being honest, not much was mentioned during the call that was that interesting. They did touch a little bit more on the China export side of things, but that's about it. Jensen also did say that he's going to Europe, so maybe we might get some European infrastructure deals announced pretty soon. June 11, there is a GTC in Paris at Viva Tech, so that's also going to be maybe interesting if we get some announcements before the event or maybe during the event as well. I think Jose and myself were going to stream that event. A quick note, Chelsea are European champions yet again. We've won it all. So yeah, I'm extremely happy, as you can see. So this quarter was another good one for Nvidia. Guidance was a bit weak-ish, so we're going to touch on that right now. After hours, the stock is up 4.3%, and you can already imagine every other player is up as well after hours. So without further ado, hit all the buttons, especially the subscribe one. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to full.com/couchinvestor. Thank you very much. And also a special thanks to FinChat. You can get 15% off if you use my link down in the description and in the pinned comment. And new users can get FinChat Pro for free for 2 weeks. Now, why should you try it out? Well, first of all, the call just ended. Okay, the call just ended. The transcript is already online, and you can already get the AI summary if you really do not want to read the whole thing. Now, that's already one cool thing, and then I'll show you the other ones, the company-specific metrics, the KPIs. So, the headline numbers. Revenue came in at $44.1 billion, up 12% sequentially and 69% year over year. Nice. GAAP gross margin of 60.5%, which of course are down heavily, but that was impacted by the H20 charge. Without the charge, non-GAAP gross margin would have been 71.3%. We knew that in the first half of the year, because of product mix as well, margins are going to come down. In the back half of the year, should go back to the mid 70%. One thing that did surprise me, that was gaming revenue. A record $3.8 billion, up 48% from the previous quarter and 42% from a year ago. I'll show you the charts in just a bit, so that was quite interesting. They said the following thing: H20 export restriction impact. The new export restrictions on H20 products for China market had a substantial negative impact on Q1 results, resulting in a $4.5 billion charge. And I do believe that they talked about an additional $2.5 billion that they just could not sell, but we're going to touch on that in just a bit. They talked about the deals in the Middle East that were announced, and then they provided here some guidance, which I'll talk about as well. Now, you can also ask specific questions. So I'm going to ask here, what did they say about the negative impact of the China business? And you can ask it whatever question you want, not just for Nvidia, but for every other company out there as well. And then, ta-da, AI generated answer right here. So, lost revenue for the quarter, and this is what I was talking about. Nvidia was unable to ship $2.5 billion in H20 revenue in Q1 due to the new exports control. So you add that to the 4.5 before and you get $7 billion in total. They did also say that losing access to the China AI accelerator market, estimated to grow to nearly $50 billion, would have a material adverse impact on Nvidia's business. This loss of market share is expected to benefit foreign competitors in China and worldwide. Jensen was really not happy with the way things are right now. He did say that it's great that the AI diffusion rule is going to go away. They're just waiting right now for the specifications, right? Because for them, the H20, well, the Hopper business in China basically disappeared. Okay, they cannot reduce it more, and so they're waiting for specifications. And let's see, because that is of course negatively impacting right now the likes of Nvidia, the likes of AMD, Intel as well. And by the way, as a percent of overall revenue, China is now much smaller for Nvidia. I think it went from 13% to now 5%. So okay, it's now less of an issue, but how fast can, let's say, the UAE or Saudi Arabia make up for that 8%? It's probably going to take some time. Now for AMD, as I've shown you in the past, AMD China business for AMD is much, much bigger than, I think it was 27%, if I'm not mistaken. It's in 20% for AMD, and for Intel, it's even bigger than that because, well, of the CPU side of their business. So yeah, having maybe more information on really what's going on with those restrictions moving forward could definitely be very, very helpful. I mean, analysts cannot model it right now, so that would be an issue. Then moving on to the company-specific metrics here, or the segments and KPIs, we can look at, of course, the biggest segment. And this is, again, truly one of the craziest charts I think we will ever see. Right? This is the data center growth for Nvidia for the last couple of quarters, but actually the last 5 years or so. But let's just look at, well, since we got that big push, right? The first quarter when we got that big push, even quarter over quarter, we can see that this is insane. Of course, the growth rates are decelerating, but for data center, right, for this quarter, we have still increased it by 73.3% year over year to now just over $39 billion, right? So we've had those increases of around $4 billion quarter after quarter. This time we've had it a little bit less than $4 billion, but okay, I mean, this is still incredible. And you can do this for every other segment, as I'll show you. Again, this is all available on FinChat. New users will get FinChat Pro for free for 2 weeks. Then if you love it, you can use my link, you'll get 15% off. Thank you very much for the support. Now, as you can see right here, the data center number for the quarter was actually a miss. Well, a small miss, 1.3%. Compute under data center, which is the largest part, missed by 3.7%, but networking beat by 43.5%. Gaming was a huge beat. So gaming was a beat of 32%, close to $1 billion beat, insane. Professional visualization was a beat as well. Automotive, a small miss of 2.1%. And then the last part here, OEM and others, was a miss of 5.3%. Then all the rest here did beat. I mean, free cash flow beat by 32.2%, but I did have a positive one-time thing that happened there. Then as for guidance, revenue was a small miss of 1.1%. So consensus $45.5 billion. The guide $45 billion flat, well, plus minus that 2%. Then as for gross margin, as you can see, 72%. So that was a beat of 26 basis points. Operating margin of 61.1%. A small miss of 55 basis points. But again, look at those operating margins. This is insane, insane. Moving on here, this is basically what we get for the overall business. This is what we get for the last close to 2 years or so. So insane growth across the board, 113.8% compound annual growth rate. Data center, gaming-wise, that's 26.7%. Professional visualization, 18.3%. Automotive, 58.4%. And then OEM and others, 34.5%. Specifically looking at gaming revenue, as you can see, gaming rebounded quite heavily here, quarter over quarter. So that was a positive surprise because I was not expecting that at all. We did have a small, really small sequential dip in automotive, but that's still up nicely year over year. And of course, on a GAAP and non-GAAP basis, you can of course see the difference between, well, with the hit and without the hit. So gross margin non-GAAP 61%. If you exclude the H20 charge, that's 71.3%. Moving on to some comments here by Jensen. So our breakthrough Blackwell NVLink 72 AI supercomputer, a thinking machine designed for reasoning, is now in full-scale production across system makers and cloud service providers. Global demand for Nvidia's AI infrastructure is incredibly strong. AI inference token generation has surged tenfold in just 1 year, and as AI agents become mainstream, the demand for AI computing will accelerate. Countries around the world are recognizing AI as essential infrastructure, just like electricity and the internet, and Nvidia stands at the center of this profound transformation. And as I've said during the DeepSeek crash, when the price of something goes down, but the adoption increases, that's when you will reach mainstream phase. And that's, of course, where you'll make much more money. And of course, with AI factories, those become basically token generating factories. And that's how you will make, well, not you, but the big companies are going to make money. Moving on to some more commentary. So, on April 9th, Nvidia was informed by the US government that a license is required for exports of its H20 products in the China market. As a result of these requirements, Nvidia incurred a $4.5 billion charge in the first quarter associated with H20 excess inventory and purchase obligations as the demand for H20 diminished. Sales of H20 products were $4.6 billion for the first quarter of fiscal 2026 prior to the new exports licensing requirements. Nvidia was unable to ship an additional $2.5 billion of H20 revenue in the first quarter. Then, a bit more on the data center and the gaming side of things. So, data center revenue for the first quarter was $39.1 billion, up 73% year over year and 10% quarter over quarter. Sequential growth was driven by demand for our accelerated computing platform used for large language models, recommendation engines, and generative and agentic AI applications. We saw our Blackwell architecture ramp expand to all customer categories, while large cloud service providers remained our largest at just under 50% of data center revenue. Data center compute revenue was $34.2 billion, up 76% year over year. Networking revenue was $5 billion, up 56% year over year and 64% sequentially, driven by the growth of NVLink Compute Fabric in our GB200 systems and continued adoption of Ethernet for AI solutions at cloud service providers or CSPs and consumer internet companies. Then as for gaming, that was driven by sales of their Blackwell architecture, the fastest ramp in company history. So I guess, despite all the negative reviews that you can see on YouTube from Nvidia critics, I guess the business is still doing quite well. Moving on to guidance, so they expect revenue of $45 billion plus minus 2%, and this outlook reflects a loss in H20 revenue of approximately $8 billion due to the recent export control limitations. Very important to note. So, all in all, right now, this is still a super growth company, even at $3.3 trillion in market cap. This is probably the most profitable company, right? Especially from the Max 7. I think in the free cash flow category, nobody really beats them. Yeah, I think so. Maybe Apple might be, but I don't believe so. Anyways, the story is far from over. The story is far from over. The information that we got here is, of course, extremely bullish for the overall AI story. Of course, it's great for Nvidia because those are really, they are really one of the only ones that really monetizes AI. Of course, you have the software side of things, the Palantirs and all of that. Yes, but Nvidia is one of the only ones, as you've seen from the charts before, one of the only ones that really already makes billions, hundreds of billions of dollars thanks to AI, data center infrastructure, you name it. But the commentary that we've got is, of course, bullish for the other companies, right? It's bullish for Broadcom, it's bullish for the hyperscalers, of course, AMD, and yes, even Nebius and CoreWeave, for sure. Because if there is a lot of demand, especially when it comes to inferencing, and they did also talk about, autonomous vehicles, robotics, all of that, same thing, right? You will have your AI factory, token generator basically, and then the business model becomes clear. Then you will really see the return on investment. Of course, this doesn't happen tomorrow or the day after or the quarter after. This is going to take a couple of years' time until you reach global scale. But this is the thing. We've already spent so much money. This company is already generating so much money, the others as well. And yet we're nowhere near the end of this, according to me and according to them, of course. So, yeah, pretty good. Pretty good. Of course, the stock's reaction might not be as wow as you might have expected, but who cares? The numbers are fine, so you should be happy. Anyways, that's all I've got for you right now. I will review ELF in due time, so make sure you're subscribed to the channel. Do check out FinChat down in the description and in the pinned comment as well. We really appreciate that. See you all in the next one. Come on, you blues. Bye-bye.